If you break down Malaysia's GDP components by expenditure, consumption remains the main key economic driver for Malaysia. Consumption, which accounts for around 55 to 60% of GDP, includes household spending on goods and services, and by extension, services would include tourism, retail, and finance. Another important driver is investment, which accounts for roughly 25 to 30% of GDP, and this includes both private and public investment in infrastructure and capital goods, and also foreign direct investments. Government spending, which are expenditures by the government on public services, infrastructure, and social programs, also play a vital role in the economy. Lastly, exports, with Malaysia being a key exporter of electronics, palm oil, and natural resources, especially oil and gas, is an important economic driver. For Malaysia has done relatively well amidst the volatility we have encountered so far this year, as Malaysia is one of the better performing markets within the ASEAN region. One of the main contributing factors is the stability of the current government compared to the different government changes we've witnessed in Malaysia in the last 6 to 7 years. Government stability is important as it allows the government to carry out policies to drive the economy, like the Madani Economy Framework, which the Prime Minister Anwar Ibrahim launched in July 2023. Themed Empowering the People, the Madani Framework aspires to make Malaysia a leading Asian economy and to improve the country's global standing in economic size, competitiveness, human development, and corruption perception. The biggest impact from the recent US presidential elections will likely be from the trade and tariffs initiatives that the new President Trump may implement. Nevertheless, Malaysia, with its strategic location, established manufacturing base, skilled workforce, and government incentives, should benefit from the global supply chain relocation caused partly by global trade tensions. For Malaysia, with stability of the government, Prime Minister Anwar has been able to roll out various economic development policies. The key ones include National Energy Transition Roadmap, or NETR, New Industrial Master Plan 2030, and National Semiconductor Strategy. The NETR outlines the country's strategic plan to transition toward a more sustainable and low-carbon energy system, while the New Industrial Master Plan is designed to transform and elevate the country's industrial sector over the next decade. As for the National Semiconductor Strategy, it is a comprehensive framework aimed at positioning the country as a global leader in the semiconductor industry. All these economic development policies present potential investment opportunities in Malaysia if the government can execute them well. For Malaysia, following on from the various economic policies mentioned earlier, there are certain potential bright spots worth exploring. Within the NETR, the utilities sector do look interesting, especially with Malaysia committed to increasing its renewable energy investments and improving its national grid. The new Industrial Master Plan has also provided potential investment opportunities in areas such as infrastructure and industrial development, including data centers development. Malaysia remains a key player in electronics and electrical manufacturing, particularly semiconductors. The rise of AI, Industry 4.0, focus on automation and smart manufacturing, coupled with the government's National Semiconductor Strategy, where incentives will be provided, should present further investment potential. In the short to medium term, the main challenges Malaysia is facing are largely macro-driven, specifically with regards to the potential trade tariffs policies the new President Trump may initiate. Economic uncertainty, driven by global volatility and fluctuations in commodity prices, also poses risk to her export-driven economy. Currency fluctuations of the Malaysian ringgit may create uncertainty for international trade and capital flows. Domestically, even though the government has announced various economic policies, Prime Minister Anwar and his ministers must now execute on them and deliver the necessary results to improve the livelihoods of the people. Given the high public and household debt, certain necessary but unpopular reforms, such as energy subsidy cuts, have to be carried out. However, These unpopular reforms may face backlash from the grassroots population and create unhappiness among the Malaysians. To create a more resilient and competitive domestic economy that can withstand global uncertainties, the government will be looking to implement several strategic responses, including economic stimulus packages, investment incentives such as tax breaks for FDIs, skills development programs, and significant investments in infrastructure. Monetary policies can also be utilized to manage debt burden and capital flows. For Malaysia, over the next 5 to 10 years, several major trends are expected to impact the Malaysian economy significantly. A strong focus on sustainability will drive investments in green technologies and renewable energy to support Malaysia's carbon neutral goals. Digital transformation and technology adoption will enhance productivity across industries, while efforts to build global supply chain resilience may establish Malaysia as a strategic manufacturing hub. An aging population will increase demand for healthcare services, and there will be a heightened focus on upscaling the workforce to meet the needs of a rapidly changing job market. Additionally, geopolitical dynamics may influence trade and investment, while urbanization will require infrastructure development. The key takeaway for investors looking to invest in Malaysia is to appreciate the combination of government stability, growth potential, and resilience. Malaysia has finally seen some semblance of political stability, which provides a platform for the government to implement policies to grow the economy. The government is working to create a better business environment and attract foreign investments, while focusing on digital transformation and sustainability. They are also investing in infrastructure and manufacturing, which opens up many opportunities in these areas. Amidst the global volatility and trade tensions, Malaysia can provide a safer haven for investing and is one of the beneficiaries of the global supply chain relocation.